Hi, this is Giles Mooney. Thanks for watching the video from the other night on the UK government's assistance for businesses under COVID-19. We have an update for you because Rishi Sunak spoke again this evening, talking to you on the 26th of March now. And we have to catch up on a few changes and also give the latest information on what I know an awful lot of people are very interested in. First of all, those three updates to what we already knew. First of all, the various rules and various businesses that were going to be able to benefit from reduced business rates. The list of those businesses seems to be growing pretty much every day. Probably the two biggest that have joined the list of people who will qualify are estate agents and also nurseries. You might remember it was cafes and restaurants and people like that. Do keep an eye on that list. Remember, there's nothing you have to do to qualify or to get hold of the grants or the holiday from business rates. That will all happen through your local council. Simply be aware of the fact that you're entitled to it, and hopefully the local council will get in touch. On income tax, when we spoke the other day, I explained that the only people under self-assessment who would be able to avoid paying their July payment on account, they would be able to wait till January, you might remember. We thought that was only going to be the self-employed. That has now changed, and anybody under self-assessment will be able to delay their July payment on account and effectively pay that final payment in January 2021, rather than having to pay the January 20, July 20, and then finally January 21 payments. So July 2020 goes for all people under self-assessment. And then finally VAT. We explained last time that if you were meant to be paying VAT between the 20th of March and the 30th of June this year, you would be able to not make the payment that you would expect to, but you still had to file your VAT return. Very important that you file the return still. One minor problem with that, the process by which most people pay these days, the vast majority, pay their VAT by direct debit. The problem with that is that the direct debit is taken from the information you submit with the VAT return. Therefore, how will they know not to take any money? As a result, they have decided the easiest way to get out of this problem is to simply say you should cancel your direct debit. The cancellation of the direct debit should happen as soon as possible, so it isn't too close to any expected date of payment. And that is something that has to be done, as I say, as soon as possible. Also, you will have to remember after this is all over to set the direct debit up again to ensure that future payments are collected correctly. Obviously, this is a work in progress, and so we're very grateful to the government for the various bits and pieces they're offering us, but we do have to appreciate that these minor bits and pieces will crop up as we go along. Now, let's get into the big story from this evening's presentation by Rishi Sunak, and it is all to do with the job retention scheme and the self-employed equivalent. Let me start by saying that people will generally either be employed or self-employed, but then there is this third category that sits between, which is directors, particularly directors of their own companies. Now, an awful lot of people who own their own companies and run their own companies view themselves as self-employed. They're not. They're not technically self-employed. The only way you're self-employed is if you have a look at your tax return. There will either be a tick in the box to say self-employed, or there will be a tick in the box to say you're a partner in a partnership. That is how you are self-employed. You are not self-employed if you own your own company. At that point, you are either an employee of the company or just a shareholder in that company, or quite commonly a director and shareholder. Now, the problem then arises because a director quite often will not earn very much through the company. They may take money as dividends, but they don't actually earn very much through the company. Their salary might be quite low. Now, this creates all sorts of problems, and we will talk about that shortly. But for now, let's focus on employees of businesses. And we've now had an awful lot more information about exactly how the job retention scheme will work. Remember, this is a scheme where somebody who was going to be laid off as a result of the COVID-19 crisis would not have to be laid off, where the government will help the employer pay the wage bill. Quite simply, the scheme starts or started retrospectively from the 1st of March 2020, and they've said will run for at least 3 months. They've also confirmed this evening that the minimum period that you could take a person and what we call furlough them, take them out of that role and effectively keep them to one side, the minimum period is 3 weeks. So we now have that confirmation. The minimum is 3 weeks. As it stands, the maximum, is 3 months. Time will tell as to whether that is extended or not. As far as the employer is concerned, it's kind of business as usual as far as the payment of tax and the payment of the employee is concerned. It will be done through the RTI system. Nothing really changes apart from, of course, the amount that you might be paying to the employee. If you want to pay full wages, fine, carry on with that. You can pay full wages. The minimum you have to pay them is 80% of their salary, or £2,500. Once that's been agreed with the employee, and remember that is an important part of this process, to agree this with the employee, at that point you carry on as normal as far as the payment is concerned. It is hugely important to appreciate that you cannot expect anything from that employee for the period of the furlough. They should not be doing any work whatsoever. There are some clauses in there about being able to do some training and things like that, but outside of that, absolutely, you cannot ask them to do anything. Now, for the employee, if they have 2 jobs, well, then fine. It could be that one decides to be under furlough, the other job carries on unaffected. There's absolutely nothing to stop that happening, and be aware that actually you could potentially find some other form of income elsewhere during the period of furlough. That will be fine too. It is only for the employer and the employee to agree between them that no work will be done for that business, for that employer, during the period of furlough. Now, how much is it going to be? Well, as I've already said, the employee has to get at least 80% of what they were earning, or £2,500. We hope that many employers will choose to pay more, but that is the absolute minimum. The government will then pay 80% of the furloughed workers' wage costs, more on what that means in a minute, up to a maximum of £2,500 per month. Which employees are we doing this for? Well, very simple indeed. The employee must have been on the payroll at the 28th of February 2020. Don't worry about it being a leap year. 28th of February is the date where we have a look. Also, quite interestingly, 2 things that I picked out that I thought you might be interested in. If you had acted early as an employer and made some people redundant already after the 28th of February, you can now reverse that redundancy process and take the person back onto payroll, but immediately furlough them if you want to. That is possible if you had effectively acted too soon before these rules came out. That is open to you. The other thing that they have confirmed is that if somebody is off work currently because of statutory sick pay leave because of COVID-19, then in that situation, you would leave them on their statutory sick pay. And once that period had ended, you would then enter into the discussions about potential furlough. Now, one of the questions that a lot of people have been wondering about, particularly for zero-hour contract individuals, is exactly how much does the person earn for this test? Well, very simple again, actually. If the person has been there for at least 12 months, we either take the higher of the amount they earned for the same month a year earlier, or you take the whole year and you take an average. The logic, in case you're wondering, is because if you have particularly high seasonal businesses, then it's really important we consider whether they normally earn quite a lot that month. So it's the higher of either the amount earned in the same month a year earlier, or the average of the entire last 12-month period. If you haven't been there for 12 months, then obviously they have to take the average. There isn't a choice. And if you've only been there for a few days in February, potentially, well, then they would have to prorate it and work out a figure based on that. They keep in the guidance talking about contractual payments and contractual hours. And as a result, it wasn't a surprise when we saw that bonuses, commissions, fees are not included in this calculation. Very important that we appreciate that, because in certain lines of work, that can be quite a dramatic aspect of the total paycheck. So do appreciate it. We calculate the numbers based on contracts, and we calculate the numbers based on what you earned over the last 12 months and compare that to what you earned exactly 1 year ago. As far as the employer is concerned, there are two parts to the calculation. What you have is the 80% of the gross pay, and you also have the additional liabilities that an employer has to pay. So an employer generally will be responsible for employers' national insurance, and also will be responsible for any auto-enrollment payments that the employer is making. What the government have said is that they will pay the lower of £2,500 or the employer's responsibility, with this 80% figure in for the salary. So very simple example on the screen. A Limited is employing me on £2,000 a month, and I'm not in auto-enrollment, so we can ignore that for now. The employer's NIC on that would have been £174. So the question as to how much does the government pay us? Well, it'll be the lower of £2,500 or 80% of 2,000 plus the 174. In this situation, the total is lower than the 2,500, and therefore that's the amount that I would be able to claim. If we had to add in auto-enrollment as well, the government have said they will pay, as well as the employer's national insurance, they will pay the minimum auto-enrollment contribution that would be required for this particular person. We're looking at 3% of a particular figure, but it is the minimum they will pay. If it's an especially generous employer, we're still down to the 3%. So be aware of that. Another quick point to make on that, what if 80% is lower than minimum wage? Well, they've said that's fine, because the person is not working for you. They are not governed by the minimum wage regulations. And as a result of that, absolutely no problem. It is okay to earn less than minimum wage, because technically you're not earning, if you see what I mean. As I've already said, directors are the great unknown in this. Many directors don't have a contract of employment, which will make part of our calculation very difficult. Also, technically speaking, a director under company law is not allowed to be furloughed. The reason for that is that a director is obliged to keep the company going. They're obliged to work for that company. And as a result, it's quite hard to see how a director could stop doing that. All I can offer you on this at this point is we are desperately asking all concerned for specific guidance on exactly how this will work with directors. My gut feeling, and this is a real gun to my head answer, so please do double check before you take any action based on this. My gut feeling is they will say that, okay, we'll ignore the rule and you can furlough a director for this purpose if the company is effectively stopping for a period of time, and then you'll be into the 80% test. That is my gut feeling. Please be careful. Please double check on the gov.uk website to see exactly the guidance on directors. I mentioned earlier the idea of a director shareholder and their receipt of dividends and what have you. Definitely, dividends do not count towards the 80% test. Therefore, if we are looking at a director, the best hope you have is that they will be entitled to 80% of their salary as a director. But as I said, we need to double check this with the authorities to make sure we are absolutely certain before we take any action in that direction. It leaves me with self-employed to talk about. And again, I'm delighted to say they have made it as simple as they possibly can. There were always going to be winners and losers on this. But I think personal opinion is that this sort of makes sense and we can see what they're aiming for. You'll also see it's very similar to the people who are employed. If you are self-employed, you will be able to receive a grant of up to 80% of your profits for a particular month, or £2,500. Now, a couple of things I want to highlight to you. First of all, the grant will be taxable. This effectively is to replace your income, and that would have been taxable. So it's fair enough that it is a taxable grant. I should have said that the employer's receipts are also taxable as far as the job retention scheme. So a taxable grant is received for anybody who is self-employed, remember, including partners. And in that situation, they will get up to 80% of their profits, or £2,500 for a month. How do we decide what your normal profits are? Well, they've confirmed they're going to look at a 3-year period, and it's the 3 years the revenue has information for. So it's the tax returns you've already filed or should have already filed: 16-17, 17-18, and 18-19. They have confirmed if you haven't been going that long, fine, then obviously they'll just use the maximum number of years they can. That might be 2 years, might be 17-18 and 18-19, or it might just be 18-19. But they will use those figures as an average wherever possible to work out your normal level of income. They've also decided to restrict this, and they've said this is only open to self-employed people who are in a position where more than half of their income comes from their self-employment, and their profits from self-employment do not exceed £50,000. So we're looking at people with profits under 50,000, and also where at least half of their income comes from their self-employment. They've said the scheme will run for March, April, and May. And I know it upset a lot of people this evening that they've said it'll take time to organise this. And so your payments probably won't come through until June at the earliest. What are self-employed people meant to do until then? Well, remember that the business interruption loan allows you to go to your bank and say, look, this is the position I'm in. Would you be prepared to lend me some money interest-free over this period of time? It's a government-backed scheme. It should be something the banks are prepared to talk to you about, because they will know that in 3 months' time you're going to get this big check, and therefore it should be something that can be dealt with. You should be able to get this money through a loan, which will then be replaced in June by this payment from HMRC. Of course, they have also confirmed that if the scheme does have to carry on for longer, it will do. What do you have to do to be eligible? Very simple indeed. You have to have filed your 18-19 tax return. And the Chancellor did explain that actually, if you haven't done that yet, if you are very late in filing, they will give you an extra 4 weeks before they decide whether or not you will qualify for this particular support scheme. I would point out, if you do file at this point, your January payment would still be due. Your first payment for the next tax year, the first payment on account, that would have been due as well in January. And also there could be penalties and interest and all sorts of things. So don't assume that they will be as generous as you might be hoping on that one. But they have said they have said that if you do file in the next 4 weeks, then you will be able to qualify for the scheme. As well as trading to have resulted in a tax return for 18-19, you must still be trading in 19-20, and you must still be trading, or at least you would have been had it not been for COVID-19 at the moment. As well as that, you have to show that you intend to carry on into 2020-21, and that's it. If you do that and you tick the boxes as far as your income, your profits being below 50,000, your total income being mainly made up of self-employment income, then you qualify for this particular relief. You do not have to contact the revenue. What will happen is the revenue will use all of the information they already have to work out whether you're entitled, and having worked out whether you're entitled or not, they will then contact you. At that point, you either say yes or no, and it all should happen magically from that point onwards. They have deliberately made this system extremely simple, whether it be for the self-employed, employed. It is really, really very clear. As I say, the only area we're waiting on is directors, and I suspect we'll get that in the next couple of days. If you are waiting for that director information, or you want to check anything else I've spoken about, then do please make sure you look at the gov.uk website, where you will find the most up-to-date information about all of these things. Hopefully useful. Hopefully you're all keeping well. And should I need to record another of these sessions, I'll do so as soon after the announcements are made as is possible.